Jeff Thomas here with a quick market update. When we recorded our last video a month ago, the Iran war had just begun. The stock market was selling off and oil was rallying. Well, that trend continued for most of the month until we got a nice bounce on March 31st. All told, the S&P 500 fell 5% for the month and was down 4% for the quarter. Considering the drama of the daily headlines and images, that's not bad for a market that's been pretty strong. On a human level, of course, we continue to pray for a quick and positive resolution to the war. If that happens, oil prices are likely to fall back to normal, perhaps with a slightly higher floor, and the stock market is likely to continue to rally. If the conflict drags on, higher oil prices will likely cause significant damage to the global economy. Let's take a look at where our 3 Dials dashboard stands now. Despite the sell-off in equities, most major indexes are bouncing off their long-term support levels, so for now our technical dial remains in the positive position. Over the Easter holiday, I listened to a group of people discussing the stress of filling up their gas tanks. The longer the war goes on, the larger the tax on the consumer, who was already stressed. Add that to a mediocre job market and you see why our economic dial is still in the negative position. As far as our valuation dial, the current sell-off hasn't been deep enough to trigger a buy signal yet. Bond yields are stubbornly high as rising oil prices make it harder for the Fed to cut rates. Therefore, the valuation dial also remains negative. Fortunately, we have been well positioned during this volatile time. Rest assured, we're watching the data closely and we'll let you know when it's time to make changes. In the midst of a chaotic world, we hope you were able to celebrate the eternal beauty of the empty tomb with your loved ones. Thank you for your trust.